Hi guys, welcome back to the show. For now, there's a big recovery in the mid-cap index as well. It's up almost about 0.2%. Couple of pockets looking pretty good. The FMCG space, Godrej Consumers, Marico, that whole lot, PNG, up almost about 2.5 to 3%. Ajay Srivastava is still with us. Ajay, we're getting a lot of queries, on our Twitter handle from retail investors as to what one should be doing now, which are the pockets to invest into. What would your own view be?
See, I think very clearly the market is, and I think will try to price in a serious amount of fiscal stimulus. And therefore, you would expect the fact that things like HCV, auto industry should be a bigger gainer because that's a direct transmission of it. You'll find rural income, which you see in the FMCG recovery, is coming from a thesis that the worse the ruling party does, the better it will become for the market because the spending taps will open up. And I think Udyan was mentioning that, what can they do? It doesn't matter. They can do nothing perhaps, but you can already announce. Like you saw the NPS announcement today. It can't be effective, but the public servants got a great bonanza in the morning where the NPS allocations have gone up from 10 to 14%, and it's all become tax-free. So a major paradigm shift took place in the government today from a EET concept they wanted to go into back to the EEE concept at this point of time. So I think there'll be lots of announcements, lots of stuff. So if retail investors are concerned, I think you should, my view is if you're reasonably invested in the market, stay put, keep 30% in fixed income. My guess is that at the end of the year, next year, your fixed income return would be as good as the index. So if you get 10 to 12% fixed income or 9 to 10%, you could be as well doing what the index is going to do.
Okay, so go to fixed income. Ajay, do you think this market plumbs lower depths? Today, it seems to have put a bottom, and one argument which some experts were making is that with all the possible bad news you've thrown into it, resignation of a governor, 3-0 loss for the ruling party, in spite of it, it seemed to put a bottom at 10,350. So, is this therefore a time when you should make the purchases, or is this a very, very temporary bottom?
I think, Lata, what's happening is selling has ebbed out. I think it's more it's not buying which is coming through. I think by and large, the sellers, the weaker hands, people have sold out to the extent, and you saw the big selling of FIs also kind of tapering off at this point in time. So I think the good part of the market is selling is kind of over. People are light on their future positions. So that gives you a little bit of a market floor in terms of on the current basis. But you can never expect more surprises to come. And the surprises could not come from India, could come from anywhere globally. You could have a couple of US executives getting arrested in China, and we are back to the turmoil. So I think I would say retail investors do not focus too much on domestic story. That's not going to change very dramatically. It's going to be bad results in January. Focus more globally that how bad this China-US thing is going to turn around. Because if they start arresting each other executives, which might happen as a retaliatory measure from China, then you are in a different territory altogether. So caution is warranted on two respects. One, the fixed income returns are much higher than they were 1 year back. Therefore, there is no necessity to plow everything into equity. Number two, global events may just overshadow domestic events. So I think domestic stimulus packages, etc., may give you some leg up. But something happening globally can take you. So keep your cash, keep your powder. If you're reasonably invested 60, 70%, stay put. Don't go to 100%. Is my advice. The rest, everybody can gamble on their own money.
Okay. All right, Ajay. Thank you for that sane advice. Thanks for joining us. Udyan, before we let you go, I know no level is sacrosanct in the market, given the situation, but 10,000 on the Nifty has somewhat been protected 2 times in the past. We went there and then we bounced back. You think this time could be different?
I don't know what will happen in the next few days, Sonia. It's very difficult to predict. But what I would suggest is that 10,000 on the Nifty is not safe as a bottom. Because there is just, these are levels. What's 300 points on the Nifty? A lot of things are changing around. I think I agree with Ajay that the global piece, the extent of the US and the global slowdown, whether we're heading into recession in the West soon, is going to be a very important factor in determining our returns. All I will say is that there are 2 things. One, there was a suggestion that if the West goes into recession, India might outperform because crude prices have cooled down now. I think that theory will have to be readjusted, relooked at, because we've got 2 India-specific headwinds in our political or expected political uncertainty and the RBI-related problems, which might take away some of the crude-related outperformance expectations for India. And so we are in no better a basket than other countries. And the second point I would say is that we are basically wading through a fairly tepid kind of a growth environment. And therefore, in the next 1 year, agreeing with Ajay, I would say that we should have a fairly unexciting kind of a stock market scenario, at least for the next 12 months or so. So no new highs for the foreseeable future. A fair chance of 10,000 on the Nifty being violated and taken out, depending on the news flow that we see going forward. So I think lukewarm expectations, watered down if you're an investor, expectations for the next 1 year or so.
Okay, not looking very cheerful. Thank you very much, Uday, for spending so much time with us. We do hope we can speak with you again in a day or two. Hopefully by then we will have some idea of who are at least the candidates for the new governor, or at least if there is a search committee and there is a serious effort to get good academics on board, or whether it goes to one of the civil servants. So we will have lots to discuss, and we will want you back with us. For the moment, it's a break. We are going to come back with more experts. Sanjay Dutt, Director, Quantum Securities, and emerging markets strategist and long-time veteran Adrian Mowat joining in.